Hi everyone, it's Thursday, July 25th. This is Liam McMahon. I'm a currency strategist here at globalfxclub.com. I'm here today to talk to you about dollar yen, specifically the daily chart of dollar yen, setting up in a very interesting consolidation pattern, and if it can hold that pattern until the large chunk of U.S. data that's due out next week, including non-farm payrolls, I think we could have a very interesting breakout scenario on our hands. So, please take a moment to pause the recording and read the risk disclaimer, which should now be on your screen, and then we'll get started. Okay, so here we have the daily chart of dollar yen. We have a very clear top descending trend line here, starting at the 103.72 highs, connecting here July 5th back at basically 101.55, then again July 19th 178, and even today and yesterday we came out to test the bottom of the top of this triangle wedge type consolidation at around 100.40 or so. On the bottom end, we have the 50-day EMA, all right, which has been supporting price pretty well since actually this candle here, July 11th. We've tested it once, twice, 3 times, 4 times. All right, since that time, we haven't since July 11th, we haven't closed beneath it. Actually, we haven't closed beneath it since back on June 27th. All right, so that's the supporting level. You can also draw a trend line in here that has a couple hits, 3 or so. The bottom is really the combination of that trend line and that 50-day EMA. All right, so I'm watching this consolidation and I'm looking at the calendar. The rest of this week, fairly quiet. Next week is a non-farm payrolls week. It's unlikely, I would say, that this range will manage to last until the non-farm payrolls release on Friday. But that doesn't necessarily mean that we won't see a good, strong breakout on the data that precedes NFPs. For example, we have consumer confidence on Tuesday, July 30th for the U.S., and then we get into the ADP NFP report on Wednesday, July 31st. We also have an FOMC statement on that same Wednesday, which could obviously cause some significant volatility. Then on Thursday, we have the usual ISM numbers and the unemployment claims, plus a variety of other important events for other currencies. But then Friday we have NFPs. So all of next week is actually filled with some very significant data out of the U.S., which could lead to a very strong data-driven break of this recent consolidation. Now, assuming we do get a break, where are we looking to take for targets and stops? Let's start by assuming we see a downside break. I'm actually, if I had to choose, I would guess that we'll see a break to the upside. But we'll start with a downside break and we'll see. So if we do manage to get a daily close here, basically below 99, which would be this trend line, this 50-day EMA, and that 99 round number support. The first target, I think, would have to be this 100-day EMA down here about 97.46. Below there, it would be this trend line at about 95.10 or so, or by the time we get there, maybe about 95.60. Those would be the next two major areas of support, and then of course if we manage to clear this bottom trend line, 93.50 right now is the 200-day EMA, and below there we could start to see a more significant correction as the market starts to work off the significant rally from back last September. Alright, so now on the other hand, if we manage to see an upside break, which would basically be a move higher to about 170 or so, a daily close above there, maybe even a retest of this breakout, I think the first stop, logical stop, would be 103.72, these previous highs. All right, at 103.72, we'll have to see exactly how the market reacts. But if we do manage to clear 103.72, I think it's clear sailing. We may see another significant run higher in dollar yen. So those are the two levels that I would be keeping an eye on here. For dollar yen. The data that we'll see next week out of the U.S. will be very significant in terms of what not only how this breakout, or which direction this breakout will happen in, but also the um, strength and um, strength and length, I guess, of the breakout. If all the data seems to agree, for example, we see all dollar bearish data, all right, we could see dollar yen easily reach that 96, 95, 60 range pretty quickly. On the other hand, if we get a mixed batch of data, some good, some bad, we may see some false breakouts and some tricky trading. All right, so that's something to keep in mind. It's going to be a very data dependent trade, but ideally you can get a breakout, get to break even, and hope that the rest of the data supports you going forward. All right, so that's our chart of the day. I hope that's helpful. Keep your eye on this slowly tightening range here on dollar yen. If you have any questions, as always, head on over to globalfxclub.com. I'll be happy to talk to you there. Enjoy the rest of your trading week, and I'll talk to you soon.